So it's the Crypto Sniper. Yes, a quick message to you all, by the way. I am in the UK. I'm in the southeast by St. Albans. Pop over to the last Market Sniper video. We've got 4 quick questions for you. If you'd like to attend on the Thursday, this coming week, 30th of June, it'll be in St. Albans, which is Hertfordshire. It's just on the M25, A1M and M1 as a location. You can come and join our community, guys, for an ale in the garden and social chats. Pop over to the Market Sniper's last vid, see the pinned post. You've got to email us on support@themarketsniper just to make sure you're not a troll, and answer us 4 quick questions, and it is listed there. Okay, let's get on with the video in Bitcoin and crypto generally. Okay, so what do we got here? So we had peak bottom callers. Tons of guys all over the place. This is it. You bounced off this XYZ moving average. You are on the extremely oversold on-chain data. You are, every reason under the sun to buy. And one day they will certainly be right. It is my assessment, however, that day has not arrived yet. We keep on keeping on to the downside. The biggest blunder that crypto guys have had to learn is that macro matters, and that it's BTC USD that you're actually looking at, not just BTC, and that we are in a macro environment where debt markets are currently failing, as we've highlighted before over here. We've dragged many of you into the realm of macro. Many of you might not wanted that. You just want to deal with one industry and one place, and who wants to know about interest rates and bonds and what that all means, and etc., etc. You are trading the failing of the existing system, and the existing system is a debt-based system, and at the moment that is driving dollar strength broadly on the macro time frame. We have actually had a rest in the dollar, but right now you have what is typically known as a small rising wedge. This is on the daily time frames. Remember, everyone will go and find a tiny short time frame inverted head and shoulders on many alts. But guess what? Long run, if Bitcoin is not reversing strongly to the upside, the alts to varying degrees, sometimes higher beta, sometimes they've actually been a little bit better more recently, as we've seen Bitcoin dominance have a pullback. More on that later. You will end up in a situation where you are in too early. It's very tempting to catch falling knives. Everybody wants cheap Bitcoin, especially if you think it's the lowest point that it's going to be representing. However, you have had a spill all the way since the 48K. Let's actually take it up and show you the 3 bears. I did the 3 bears story for you. The 3 bears flag. That's right. What do the 3 bears flag? And I highlighted them for you last time, so I won't do this too long, but that was your all-time high, 69, marginally higher high than your previous high, and you actually had your first real flag kind of over there. That was a small to medium size flag. This was a lot larger one. Which is your second and largest. Everyone was getting a bit bolshy and thought it was all over at that point. And this is the 3. Now 3 is a magic number, so many of you can be tempted to think it's all over. But that is like that. And here what do you have? You have a tiny shooting star. We're now on a much higher time frame now, daily, making a rising wedge. That doesn't mean it can't become a flag. If it pulls part of the way down but doesn't follow through and then goes back up, it can become quite a few things, and you only fully know at the time. But what I can tell you is it's looking a little bit tired and needs a rest. It's got that little tiny shooting star. So you've had the 3 bear flags. That's what the 3 bears have flagged. Here you go. That was them. And they've all flagged down. You keep on keeping on in the name of continuation. This doesn't mean this absolutely can't be an upside and it doesn't extend and turn into something a bit more optimistic. It could sell off a teeny bit and get a bid and then go higher high and start gaining a greater deal of momentum like that, and then pump back to there. There's lots of scenarios. It's just not particularly likely in the current environment. And I'm going to touch on that with you as well. So let's pivot, and we're going to take a small check-in on the currency side for you to understand a little bit about the other part of the equation, which is the dollar. And the thing that has been driving the problem here is actually rates, yields on debt. If the yields are heading up on the American debt, such as the 10-year yield, which is a very common market, and I've shown this one to you before, then generally you will find that, and I was updating the community on yields, why it ain't over, why I think this is going to press out higher, and it's now moving in exactly that direction. We have almost a 3 impulse falling wedge here. Kind of like that. You could also argue it might be a channel, but this is looking like it's reversing to the upside. This was a very painful period for Bitcoin. This is during the period that it ran the 17.8K. Then we had 2 key legs of selling, and normally they come in 3s. So you kind of had, that was the main leg of selling when you rallied almost as high, marginally lower, but kind of a double top type situation. You could even have argued that you had a bit of a head and shoulder on there on the basis that that just about was higher, and you may well have made it on the reversal of yields to the downside. So you then get a weak rally, not that impressive, kind of like what Bitcoin's doing now in price. You get a second key leg of selling, a little bit of a pause on our splitter, as is typical, and then you get an up and down, and that could just be your all the selling you get over here, and you fail to make a new low on these hammers here. A couple of times you tested down, both times resisted. First you were on the candle, the splitter. The second time you're at the other side, and you just tested the splitter again, and now you're breaking out to the upside. This means yields are going up. That means debt gets more expensive. That means stock market goes down, the tech stock as well, growth stocks particularly. But it also means more pain for the consumer, because your mortgage rates will go up for an American buying a home. Credit cards that are on floating rates could go up. Other loan-based agreements could go up. Less tendencies for corporations to borrow money and buy their stock back, because the rate that they're going to have to pay on the borrowed money is much higher, and the outlook for the stock is not nearly as fluffy good. So these are dollar enhancing things, because in other countries such as Japan, they are applying yield curve control. So if I take a similar look at Japan, you'll see they're actually maintaining this level in and around the 22.4. You will notice a couple of skittish moments in there when the Japanese are facing a lot of sales of their debt. People aren't believing that they can win this war forever. Everyone says it's the widowmaker trade to short Japanese debt. It's the widowmaker until it's the rainmaker trade. That's how these things work. The early guys get killed that don't have timing and don't have technical analysis. But eventually, you can't build a wall on the water's edge of this ocean, because the tide keeps coming. And this is what's happening. So some skittish moments here where they're trying to hold the value of the debt up. What are they doing? Well, they kill the currency. The currency gets weaker. So would you rather hold dollars being paid 3% and the stronger currency, or would you rather hold yen and be paid 0.2% and watch the currency weaken? Because you either devalue the debt by letting the currency go soft, or you let the specific asset itself go soft. And at the moment, because of pensions and various reasons, they have allowed the currency to devalue. And we've shown you this chart before. That's what the yen has done. Since here, you could have been in, and we've done this as an HVF, 102, and you're now 135. You're talking, in most instances, a 33% increase, and in fact, you tapped out at 136,708, making our HVF target that we highlighted to our community. There you go, nice shooting star through the target right now. So you might think, well, the yen might get firmer now. Well, it may on a shorter time frame already be indicating that that's all it wants to do is a pullback, and you could get a rising wedge, which could become a type 3 rising wedge of strength, because we are in a yen devaluation phase. So we should continue to suspect appreciation of the dollar next to the Asian currencies. So we'll be watching things such as the yen and the Korean won. We need it to stay above this level. If it has a more sustained pullback, then there could be a bit of relief for the yen, but it'll also come into question, what's the dollar doing against the euro? What's the dollar doing against the euro? So the Dixie's performance overall will be determined by the euro. So it closed Friday at about 104.1, and it's slightly off. That'll be partly because it's mildly off on the yen, and the euro is mildly up for now. However, you will note on this euro, whenever it's rallying in this range around 1.6, it's getting its ass beaten back. So we can see that there is real resistance. So we haven't started the Sunday evening with extreme dollar strength of any variety. We've actually leaked a little bit up on the euro and a tiny bit flat and down on the yen, the two big components in there. But we can warn you that this 106.5 is not a welcoming place for the euro. And apart from a very small, complex, interesting reversal structure there, you are not easily staying above there. So we could see during the course of Monday, or the Asian session, which is just starting now, a sell-off over there. What has this all got to do with Bitcoin? Well, Bitcoin isn't looking that great, and neither is the dollar that strong. So what does that say about the Bitcoin's performance? Shooting star, top of a rising wedge, with a dollar being benignly weak, with the euro actually gaining in a creepy, grindy kind of fashion that's pretty ominous for a later smackdown. That could be very dangerous for Bitcoin. In a similar fashion, the USD JPY, a little bit of an off can come off a little bit, and that's kind of what it's been doing in the last 2 hours. If we do the daily, it is opening, and it's not enough time yet to determine whether it's an up or down. But the bigger time frame shows that it was actually softening into Friday on that shooting star and has dipped a little bit. But let's see what it actually does. Asian sessions just opening now. An alternative Asian currency to keep in eye is also the Korean won, where the dollar was squeezing higher and popped out of a rising wedge only to soften in the course of last week. And everyone, peak inflation, and of course during that period the 10-year yield was coming down, and guess what? Bitcoin had a wee rally, a micro PP rally, which has led it to do a structure that has very little conviction. Given how much it sold, the Bitcoin that you are seeing here is showing not much strength. This is on a 4-hour. Remember, daily chart looks very small beer. This is with a resting dollar coming back. This was with yields coming back. So debt prices were going back up instead of falling, which was keeping the Ponzi together and being more of a risk-on environment. People saying, people talking about risk on and all of this, they're going to miss the great entry. You know what? I probably will miss being the very first to jump back in long, but I'm not going to get washed and catching the falling knife. These old platitudes like catching falling knives are valid and true and oft repeated because they are hard-earned knowledge done from countless tendencies. And retail, new retail particularly, noob era, is to trade against the existing trend. You were 69. You've traded 17.5 nearly. That, my friends, is a huge sell-off already, and they'll go, all the more reason to buy. No, all the more reason to keep on keeping on with the bear theme until the market says it's up. Until the market says it's up and you miss a turn. So, other reasons why we think we'll go down. Total 3 could drop you down to the 2-hour time frame. No, we'll take it up to the 4. Inverted HVF. rally after the second interim. You have a target still to make, 295. You're at 376 billion. Plus, a little bit head and shoulder rest coming back where the neckline could be. You guessed it, our second interim. Nice squeezy, good target, well drawn, nice spill down and a little bit of a rally, very rising wedge itself. You could be drawing similar type structures across here. As you can see, we've identified the basing ascending grind line. That could be falling at roughly the moment that neckline is. You break through, you rise up again for a right shoulder, return move, and then you let it go. That's how it may roll on this particular structure. So total 3 still has an outside, still has a downside target to make, as do many of our calls, such as Maker, such as we expect Hex to trade sub a cent. It's at 4.5. All those aspects still to happen in our view. We've got Maker, wait for it, 300. We're getting a number of targets. It does depend they are quite broad because the exchanges have had different levels of spikes on it. So there's been quite a bit of variance by exchange on Maker. On the FTX exchange, we expect low 300s. That could lead to a 300 run. Again, a marginally higher high here, and then a leg all the way down. This is head and shoulder potential and rising wedge. Yep, it's head and shoulder potential and rising wedge. Make the scale it nicely, Francis. Let the people see. Come on, dude. That's Maker. Yep. EGLD. Ooh. Broadening structure. It's absolutely spilling. I jumped in back short up top here. I'm already making good cash. Guys. Marginally higher high at a key level of significance on a bigger time frame. Let's have a look and remind you. We've told you $27. I was getting short again in deep in the 60s, 61s, and now we're at 55. This thing just is giving me puppy licks. I think it falls out of this broadening structure, and it has these downside targets still to make. Nothing in our tune has changed. Downside targets are expected to perform once they triggered. That is it, my beautiful friends. We're looking for 27. Remember, that's on that exchange. If you're not on that exchange, it'll be slightly different for you. There is variance in all of these because you had quite big wicks here. You've got to learn the geometry, and it's not just about doing the draw, it's understanding how and when. So all this and more you learn with us, and you watch it implemented. People think, oh, I can just freestyle and free nick. It's nothing like implementing for yourself and then with a community of others and getting all your errors ironed out. It's kind of thinking you're cheating the black belt karate sensei out of money by watching his classes on YouTube and never going down to the dojo. Good luck. Tezos the same, guys. Tezos the same. We expect 105s and a bit of an overrun. It's also, oh, that's a nasty sell. It's a nasty little sell. This Sunday's asking. So Bitcoin as a shooting star, they're also crapping the bed. So I was going to say something else to you about Bitcoin dominance. So we had a mixed feeling because you had a great break, and this was all bear market. What did it run? Key level of significance, 48.17. What did it do after that? Pullback, return move to the falling wedge. That's right, this is a falling wedge that you're seeing here with a big red line. Let's remind you about it. Go back up a time frame. That is it. That was the break of the wedge. Return move, spill after running the key 48.17 level. That was a downside target in an inverted over here that gave us the mood that this was still going to be a bull market during this phase. Yes, took you all the way into May, that did. Then this churn, boy oh boy, and the call to break up and that it would be bearish for crypto has certainly happened. And what's happened now? Bitcoin sold off to 17, but the alts were almost tired of being sold off because they'd been hammered so hard during this period of the year. So at what point does Bitcoin dominance stop giving up? Well, it may be done, but it also has the possibility, having broken offside, that it can come down again So there might be a little relapse, and everyone will go, you see, you're wrong about crypto. We're going up, and a little bit of a Bitcoin dominance pullback. That's generally bullish for crypto. If this is to make its target at 42, doesn't have to, but it could. You still might have a spell of rallying again. So this may not be the last time they roll over. They might get a rally and go up again and make another marginally higher high. I'm talking of the likes of Maker, Crow, Ripple, Tezos, Elrond, all of these. That's starting to look very ugly in terms of the nature of how it's selling off. Boy, am I glad I got it on. And we've been waiting for this. I've been waiting for this rally to deliver the next opportunity of selling to take money out of the market, guys. Have people in pain here, and there's the beatings are continuing. You know, you've got this cowering little soul that's being hammered by a brute, and unfortunately the beatings are going to continue until the cops arrive, and that's the only way this game gets saved. And the faster it happens and the faster it gets over with, almost the better in a perverse way. So Tezos, yep, losing the skidding. This is head and shoulder potential structure. Rejection, marginally higher, rejection, knockdown. This is not continuation structure. None of this is continuation structure, except, of course, if we're looking at Bitcoin on the bigger time frame, we see this all on bigger time frames as downside continuation. So if you're talking about the bigger time frames, it's a downside continuation structure. This basing ascending grind line has now been broken. I'm going to redraw it again. It's been touched. Any further downside, you can have a little bounce rally, little mini head and shoulder, you're over and you're down. Now, that doesn't mean you're down and you make a new low. You could have a weak shoulder, you could break, you could do a little mini head and shoulder, you could come down to some of the way, and then you could get bid up again. It doesn't have to be a death knell spill. We could take a while about running our downside targets that we're waiting for on Total 2, on Maker. You could end up having another rally period that goes up like here. You could do a full inverted HVF to the downside and end up with a big macro, well, it wouldn't be even that big, but it would be bigger than this structure, with a break only coming here. We're okay with whatever it is. If we start to get bid up again, and I've got short up top here as I have, I'll take the profits down here when we start going back up again over there, and I will have eaten nicely just on that move on 3 different tokens, and then I'll watch it come again, and I'll be getting short again there and riding it again, even if it has to go one more time. Eventually it'll be calming down and flattening out, and I'll probably stay in this one if it is to do an HVF and wait it all out till it breaks to the downside, if that scenario were to come to place. So we've spoken of Tezos, we've spoken of Maker, we've spoken of Elrond, favorites of ours. We've also shown you Crow. I was telling the community on the weekend, Crow is grinding up. It's going to get a slap almost certainly at some point coming soon. And that was its very low grindy, and now it started that business. Tiny channel, made it to its target of its HVF and is now selling off. Again, this doesn't have to make a new low. It can just come down here. It could come down even not very far at all, depending if we're going to go down lower now or we're going to wait for a full-fledged dollar demon to come out of the blocks, which will probably materialize when the USD JPY starts running again. That could be tomorrow, it could be next week, who knows, and that will determine whether this sells off now and makes new lows or just forms continuation from downside. The bias remains bear side continuation. Don't forget the event, 30th of June. Hit the like button if you value that which we do for you here. So ETH has had quite a rally. It's back up, having dropped below. There's that. Look at those channels. They're exactly the same. They work on all cryptos. Tell me they're not correlated. It's almost a perfect draw for what this was. ETH traded below the 1,000 mark for a small little kiss. What do you get? You get a rally. Just like the Euro Swiss franc traded below parity for a while. Hey, we ended up with a rally for a sustained period, and now it's heading back down. Now it's no longer new news that it's not traded the sub 1,000 for the first time in many moons. Now it will be, oh, we're back down here again. We were here just recently. We'll be fine. Don't worry. It'll rally again, until it doesn't. But again, as I say, you could get a macro continuation pattern. It won't necessarily just trade straight down. You could do something again like that. Who knows? How do you reverse? Well, you could come down. How do we be wrong about this and this be the first reversal? Many of you will, with bull bias, will want that to be the case, and that's okay. We'll see it if it happens, and it'll happen something like that. Comes down, but not as fast. Maybe makes the same level or not as low, and then goes up to there, and next thing you know, you get a W bottom. That's how you fix it. Ideally not too fast down for the bull scenario, so something more like that. Maybe not as low, but similar, so that it can still fall as double bottom, and strong on the up. That would be even better. That would be a W bottom and then a small little pullback, because there was a bit of complexity here when you broke the neckline for the very first time. In fact, you had a two shouldering event there. Many shoulders, one bigger than the other. You would have it expect at least one shoulder, maybe two, over here resting in a bit of churn. Then you will be in a good position to go, and that's the point. We say, look, this looks like it could be bottoming. So there's plenty still to happen. Meantime, the next short-term leg looks like it's going to be probably to the downside. But it can change if the dollar changes. So we stay close. We could put alerts. People underutilize alerts for giving them a heads up in which direction. You just want to know. Straddle it like that. Are you up? Are you down? So Crow we've done. We didn't do Ripple. We did mention that Ripple was, Sol's up to almost 40s. It was 26 at one point. Ripple is bounced and supported on the funnel. It's not uncommon that happens. It's bouncing between two funnels. We can put it on the 12. Let's go 8. Shall we 8? There you go. That's it. It's caught between two funnels. That's where it is. Now it had quite a decent bounce. I actually think there's a plan for Ripple at some point, but this could turn into first inverted to the downside. But if the dollar doesn't show up, maybe it will rally into the funnel. It ran up to the funnel and it got knocked back. Surprise, surprise. Triggering event, little flag there. So it did support legacy funnel, but it also put a foot through the funnel, which generally says we'll rally now on that hammer that was there, the hammer, but we're probably likely to run this at some stage. Target is 26. So still some downside if this is to happen, but it was fairly bullish here. So this wouldn't be my favorite short, and this does have a slight possibility of being either way. You could have an upside push in here, especially if the dollar is not particularly impressive. So I wouldn't short Ripple, but I haven't ruled out that it'll do its target either. Still got plenty of time, and things could get disorderly. So it's going to come into, what are the indices looking like? What is oil looking like? What's the outlook for inflation, which affects the yields? Well, I showed you that the yields look like they're going back up. That's generally, you're not going to have to wait too long before the dollar starts to look very much firmer. But we'll see, we'll wait. It's first leading the yields. This is a debt-based crisis. This is all about debt. This is TLT. Also had small rally. Well, it starts going down again. Problem, and that's how it finished. Little bit of a rally, problem. Last time it had a little bit of a rally, new low. This is debt devaluing, not the yield, the value. This is an ETF of long-term debt. TNX, the rate side, this hasn't got the live trading, so it won't be trading. And also the Italian stopped going down here. This will put the pressure back on the euro. It could weaken and soften the euro. Dutch minister saying Italy must solve its rate problems. Well, if they could, they would have already done it. You wouldn't have the problem. So that ain't that helpful. So we'll see if the Dixie, where it ends, what will happen. At the moment, it looks like it might just slip out the bottom here, which is kind of what we expected. This was a steep bagel. Could be a little bit soft on the dollar. But I have to say, Bitcoin is not looking that good given how soft on the dollar it is. So Celsius, all these other pieces of news, fundamentally it seems the money might go somewhere else. There is fear out there. What's happening with Apple? It traded up. All the tech stocks traded up generally last week. Tesla, even ARK got up to 45, almost buoyant. More to be proven though. That was pretty strongly up though after a pretty strong down. So this is increasing the volatility. So it's going to be interesting to see increase the volatility. So the tech stocks have shown that they got a bit of a bid last week when the dollar was arresting. Why did Bitcoin not get a bid? That's looking worse. The dollar's soft and this little shooting star is looking worse. It can't get a bid. If we go and look at Bitcoin also against the Nasdaq stocks, it is giving up ground. We're waiting for this to show us independent strength versus the tech stocks to prove it's more than just a risk-off vehicle with a high beta to tech. It can't do it. It's looking down. That's a down trade. That's on Friday. I'm not sure it's trading live. Yes, it is. Some of it is live. So there's futures on the IXIC. This is looking like a pennant with a bear pole. Typically those resolve to the downside. Guys, I'd love to tell you something positive, but I ain't gonna lie to you. This isn't looking that great. You could see Bitcoin actually be one of the bigger percentages on the downside if this resumes to the downside. If it resumes to the upside overall, it could also be bearish. It could also be bearish. The irony is this period has not been bullish for crypto. It's just been more bearish for Bitcoin. That's what happens when you're in a bear trend. Even when the typical things happen that are good for you, you're not strong enough to exploit them. This points to the bear. This should have been a bull period. And what did you get? A rising wedge from $17,800 to $21,000 on Bitcoin. Yeah, some alts have outperformed. That's why it's down. But in the big picture of things, they have done small moves against large devaluations over this entire period. One more time we show you Maker before we move on. Rising wedge, two skittish candles, that's a shooting star. All the way it's been down from a long time ago when it broke its 2167 level. 2,167. That rally is really not impressive in terms of how much ground has been lost. As we've said before, it could have been short from around the 2.5s here on this secondary rally, and you should have held. You'd be sitting, whatever you shorted, 250,000, that 2.5, you would already have almost 60% of it, 55 going on 60% of it, waiting for this to run, the 305. Okay, remember to book a call, guys, to learn and get updates in terms of what we're doing. If you are serious, if you're happy, you know who we are. We've been here for years. We're not disappearing. Our guys are chosen from the community and will talk about their own experience when introducing you. We don't have people that abuse our people coming on who are doubt anything about our sincerity and desire to help people build wealth in reset times. So if you are unconvinced of that, don't book a call. If you're reasonably convinced of that and you'd like to chat to someone who's going to be friendly and supportive, themarketsniper.com, themarketsniper.com. All other contacts on Instagram, with WhatsApp numbers in this YouTube are scammers, and we can't stop them from doing it. YouTube doesn't care. We are reporting profiles all the time. They stay up for ages. The social media companies do not care. only engage with us from the website. It looks like this. If you haven't started here, you're not in the right place. Simple as. This is an important period, because if we get a macro spill and the tech market turns down again, guys, if those things occur, what you will find is that it will be a deathly and quite possibly capitulative. You could see a lot of overperformance, and you could see a lot of people getting really hurt and being really miserable. A lot of your trade leaders that were asserting that this was the bottom, you've hit the moving average 4 times on the history chart, that they've optimized for that particular data. You have not ever seen a macro challenge like what I believe is coming. This is the website. Book a call. You can also check out the results. You can watch a video, and there's free material if you're not yet ready. Go ahead and do it. It's absolutely a gift from us. You don't have to pay us anything for the free course. Booking a call costs you nothing. You have a chat. Having a look at the results costs you nothing. It's all there to give you a little bit more of an idea of what is going on in the world. Okay, it's the Crypto Sniper. It's the Market Sniper. Go grab the support at the Market Sniper email and the 4 questions. I'll tell you them super quick. How long have you been following? It's no problem if it's just a day, a week, a month. Some people follow for 5 years before they even consider engaging. It's all good. Your social profile that you choose to engage with us, is it through Facebook? Who are you? We can follow you back on Twitter, etc. And then the big one is the key question you would like answered. If you were to pop over and have a chat in terms of reset, crypto, the markets generally, you're welcome. We'll have a chat. We'll have a beer and a pub lunch in the lovely town of St. Albans. Venue will be sent to you after you've mailed in your the 4th question, of course, was which was your favorite video, to give us feedback on what we do well that you like versus what you're less interested in. Keep it to 2 sentences in terms of your question, please. And that is all on the Market Sniper. If you forget it, send us an email on support of the Market Sniper. You can come and join us for that particular event on the 30th of June. Until then, thank you for watching the Crypto Sniper. Hit us a like and give us 1 share. We appreciate that. That's the only currency we require. Everything is for free. We tell you the best that we feel. And I think this will roll over. Will it run a new low, or will it bounce and wind up like it did here? See this descending triangle? This is, of course, Maker that we're discussing now. Many of the others are in a very similar position, I'm afraid. Doesn't matter. You can change the names on the coins. If the macro wets the bed, it doesn't matter how good a quality DAO you think Maker is running. They will wet the bed too. Have there been certain tokens that have gone down less? Yes, we've got a list of them. We'll be watching them. When the time comes to buy and there's capitulative selling, we do not think it's over for crypto. We're not perma bears. Crypto will be back, and we will be fresh and well stocked with powder. Do not be one of the ones that has been washed out and whose soul has been broken by events. Okay, with Bitcoin dominance slipping a tad lower, I leave you for now, and we'll see you on the chat with one of our community members. Until next time, thanks very much, and we'll catch you later. Bye for now.